Okay, guys, this is a very controversial topic, but we gotta talk about it. And especially, I'm gonna talk about what Meet Kevin's argument is in terms of ape stock versus AMC stock, and what the rest of the ape community thinks. So at least Trey's trade response to Meet Kevin in terms of what his opinion is to what Meet Kevin is arguing about. And so we're gonna kind of dive into that a little bit, and then I will give you what I think in my opinion, from both sides, what we've seen, and you're probably gonna think about what is actually best or have a better opinion. But I'm going to dive right into it so we can literally see exactly what this is all about. And I'm not saying who's right and who's wrong, but with what we're gonna be seeing, or at least the fact or opinions, and then we'll see really, or we can dive and everybody will have to take their own conclusion based on what they think is actually or could potentially be happening. So let's just dive right into it. So here we go. Let me pull this one up. All right. So first, there's a few things that Meet Kevin talked about, but I just want to go over some of the things that he actually said himself and what he believes. So um, one of them is it says ape is good for AMC, so do not hold ape, instead hold AMC. Well, that's true one way or another because let's just put it this way. The whole thing about creating or at least having this preferred ape, preferred shares for AMC is, if you remember, a lot of you already know this because AMC tried to raise money way back, but trying to dilute more AMC shares, and then everybody voted no. And since if you have most of the people invested into your stock, which in this case AMC, it's mostly owned by retail, and they said no, you gotta find another way to raise money. And so I'm gonna show you something here real quick so we're gonna actually see it. So this, I got AMC shares, and I want to show you what this argument, because they need to raise money. AMC, everybody knows, is deep into water, like $5 billion in debt. So if these are the financial for AMC, if you go back all the way to September of last year, the cash flow for AMC was about $1.6 billion. But since then, if you go all the way up to now, which is June of this year, a couple months ago, AMC has about $965 billion left. And that was a couple months ago. So if we were to go in retrospective to what's been happening in the time frame, they're probably down to 8, maybe 700, depending. But they have been burning cash at a really fast rate. And this really makes sense in terms of saying they still need to raise money because they still have the debt to deal with. And think about it this way. I understand that most people want to see the momentum into AMC, but we also need to remember that it is very much possible that in the near future, AMC could literally go bankrupt, like we've just seen one of their competitor basically going bankrupt. It could happen, but here AMC is seeing a potential, or at least an opportunity for them to find ways that they could not only raise money, but be able to pay their debt down, which is literally why the APE or the preferred stocks were created in the first place. All right, and the fact it was created in the first place, and they wanted to use it to raise money. That's literally all that is to raise money. But then I understand that they also have to think about, okay, if we're only going to think about this thing as something that's only going to benefit us, or by that I mean the board or the company itself, well, you don't want to screw also the people that are actually helping you to get there. But again, this is where I want to bring me to the second thing that Mitch Kevin said, by saying this is going to dump really hard because at the end of the day, everybody's going to get screwed. Well, if you're looking at the behavior, usually how companies usually do or corporate, they tend to do it that way, right? This is an argument, but in this case, Mitch Kevin is stating it as a fact. And if you hear what Trey's trade is trying to say, he's you don't want to call everything to be a fact, but instead you want to call it more like an opinion because it's not a fact and you don't know that. You don't know if actually by screwing, you or the ape community, it means that they will actually be converting or at least diluting, and then when it dumps really hard, basically everybody's gonna be losing if you're holding apes instead of AMC. And he doesn't actually think, which is a fact that Miss Kevin is saying, it is a fact that he doesn't think that they're actually going to convert the apes into AMC because it won't technically be beneficial for them. But in this case, what I think is, you don't want to screw, normally, you wouldn't want to screw the only people that actually believes or help you raise money. Because think about it this way, even if AMC raise money, AMC they're able to pay, even if they're able to pay their debt down and whatever it is, and they screw everybody else and they're cash flow positive, it doesn't necessarily mean that somehow they're out of the hole and then they're going to be prosperous after that. Because think about it this way, the movie industry, or at least let's say the theater industry, is still literally in trouble unless if AMC put their money to really good use. All they will be doing will be just buying themselves more time to not go bankrupt anytime soon. And then at that point, if they have screwed everybody else and no one actually, because when you screw the whole community or the people that believe in you, they walk away from you. And now you don't, the only people that could help you actually raise money, you won't have them anymore. So you will only like literally buy yourself some time so you won't be able to go bankrupt, to try and find a way to use that money for something that could keep the company afloat. But it is not exactly guaranteed that at some point you will go bankrupt. So in reality, you'll be screwing the people in a short term, but in the long term, you're screwing yourself. So would they be really like doing that to themselves? This is where I don't think so. I think that even if this actually works, if this actually is a good thing and they are able to raise money using APE, I think one way or another, it's still going to be a win-win situation. They wouldn't want to dilute the whole thing. I think they, in my opinion, they probably will still keep it, between APE and AMC, because it's still something that will make them, cash flow. It will be a way for them to raise money. And from time to time, I'm sure they will be able to raise money. Right now, for what they have already initially released, and they could go up to 5 billion more shares that could be available out there. But again, this is not something that they are planning on doing either this year or even next year. So if you think about it, it's like there is some kind of a long plan. It is a very risky plan. They are betting that they will be able to raise money with this thing, but it could or could not happen. But having to think that they will literally go ahead and screw, I understand what Mid Kevin is saying, and yes, but is it a fact? Not necessarily. It could happen because many corporate have done this before. But again, my point here is, would you want to literally screw the people that are helping you stay afloat? Because at the end of the day, you're going to end up screwing yourself. That's what I think. So now, the argument that most people are having are to say, well, the Google argument, saying, well, AMC, just like Google, Class A and Class C, right? But the only difference between the Google Class A and Class C is that one of them, the Class A, has a voting right, and the Class C doesn't have a voting right. But one way or the other, is we're going to talk about intrinsic value. There's not really a preference between which one you want to get, unless if you want to have a voting right. And that's what the choice would be. But in this one, Mitch Kevin says, APE doesn't have any intrinsic value, one way or the other. And most people are actually, on the APE side, they're actually comparing this to be like Google Class A and Class C. But let's just be clear, right? On this one, I think Mitch Kevin, in this case, he's right, but not necessarily 100%. Is only right if and only if, right? It does not, if and only if the board does not convert it into AMC common shares, right? If they do not, then it doesn't have really any intrinsic value, one way or another. I'm sure by saying this, a lot of people are gonna be like, "Why are you crazy?" I'm just saying that because his argument is that they don't have, or they wouldn't really try to actually convert it. They have no reason to do that. They're just telling you that they can, but they don't have to. It's going to depend on themselves. Yes, that's true. They don't have to do that. And he doesn't see the reason why, because it is within the fine print. Basically, they're giving them the opportunity to say, we can and cannot. We have the choice to do whatever we want to do, which is true. They have the choice, and that's what they have told you, and everybody knows about it. It's not a secret. But again, his argument is only true if they don't convert it. But if they do, then it does have intrinsic value, one way or another. But now, in this case, if I were to bring to the ape side where they say Google versus Class A and Class B, let's be clear. On the other side, Google is not in trouble like AMC is. Google is not cash flow, it's not cash flow in trouble, right? They're not trying to raise money to stay afloat or to avoid bankruptcy. They're far, far away from that. And so, to me, that argument, it's more like to try to explain how, it's like this is more like a belief in the people or in the AMC board, or you think they won't really do this to us because they're trying to be good guys. But in reality, if you think about it, they have to think about themselves, by themselves, I mean the company first, not you. And so first they need to get what they think the company need. And then after that, they will have to think if they want to keep this going, so that way it will be good for everyone, well, quote unquote everyone, or to screw everybody and walk away. But if you look into those two arguments, the fact is, the hope here is that Ape could potentially squeeze or go through this kind of crazy market, momentum we've had before, and people get to make money. And then at that point, they will be able to have it like, yeah, of course, bag holders will always be there. But as long as some people do make something, there's the hope. And then the company get to make something, and it is good for everybody, quote unquote. So the Google arguments to me is more like putting hope or trying to justify how good of a heart the board of AMC could be in this case. Not necessarily, which is why when I lean a little bit toward what Mick Kevin says, and he's kind of very strict about it, and he's thinking they're really going to screw you. So old AMC. Now, to not make this argument much, much longer, I want to show you something, what's going on with the stock itself, right? So let's go to the chart, literally. And I could give you if I think that you should hold APE or you should hold AMC. Well, this is what happened. When APE, or at least when APE was released, right, AMC dropped. But I want to show you right before the day it was released, AMC closed right here. It was about $17. Let's just say 18 bucks. That was the close. And the next day, when APE came in, started trading, boom, AMC opened somewhere around 11 bucks and then ended up closing like $10 and some change, or like $10.50. But then if you look at it, the way Mick Kevin is saying that if this thing dumps, it's better to actually own AMC, because then that value of APE, if it goes away, actually will give the opportunity for AMC to bounce right back up. And if I were to go with that argument, I would say right now, if you look at the value of APE, it's about $7.13 at the moment I'm recording this video. It could change at any time. And if you look at the value of AMC, which is about $9 and $9.58 right now at the time of recording of this video, and if you add these together, 958 and 713, you get somewhere around $16.72. Right. 71. I'm sorry. $16.71, which is not really far from where AMC actually closed right before this, right before APE started trading. It's only $2 below, and of course the overall market has been kind of pulling back a little bit, from where they were. So looking at the argument, it kind of makes sense that ape actually took some value, even if it's not fundamentally, even if it's, but if you look at it, yes, there is the idea of saying AMC, the bankruptcy part of it, the fear of it, and having AMC's rival going bankrupt. But there's also this ape that, if you look at it, it kind of makes sense in terms of saying, yes, ape took some of the value out of the AMC common shares. And so, in the argument that if ape were to go down, the momentum will be back right into AMC. And so, it would prefer to actually hold the common shares than to hold the preferred shares. That I'll leave it up to you guys. But if you look in the fact in the chart, most of the time, what usually happens is literally what Kevin says. I'm not saying that is 100% correct. I'm just saying that the behavior in the market tend to actually go with what Kevin says. If and only if ape were to really, literally sell off big time, that would put this momentum or mentality, it will act like a catalyst into the actual stock itself, which is AMC common shares, as if, everybody will be like, okay, this is not going to have any more value. And then everybody will be jumping back into AMC because guess what? It just got dumped to use that money or whatever the company has raised into the actual AMC or the actual company to lift it up. And so that will act as a catalyst for AMC stock to go right back up. And we can see the same way we saw the gap down, it is possible to see that as a catalyst for a gap right back up. That's all I can say in terms of saying, and because in reality, AMC literally or act or moves based on the catalyst that happens, which is in this term, it went down because of the ape and everything else. And it is possible that it will go back up for a trade opportunity. If it were to sell off, that's usually how the markets react. And so no one is wrong or no one is correct. All I'm saying is they've somehow could find themselves in the middle. Kevin is looking at the fact and how, well, at least what the fine print says, and he takes it and says, this is what I think and it's going to happen. And on the other side, they think it might not happen, but at the same time, there is more like a hope that they would not really screw us, because they wouldn't want to do that, because no one really thinks they're going to do it that way. Again, we're putting faith into what they say, but they're clearly telling us what the fine print are. But at the end of the day, I also do think that they wouldn't really screw anybody, because at the end of the day, they will end up screwing themselves. So anyway, this is my opinion. I hope it does make sense to you. This is what I think. And hopefully you can actually make your own conclusion to what you think this could be. So thank you guys for watching this video. As always, as for me, I will see you in my next video. Bye-bye.